everybody. How are we doing today? Hopefully well. I believe I see Edward Haddock in here, so we're going to go ahead and jump right in. Thanks for being with us. This is our very first program of the Venture Center in 2021. Excited to have you with us today. My name is Ashley Jones. I'm the Managing Director of Community Programs here at the Venture Center. And today our guest is Edward Haddock, who's the Arkansas District Director of the SBA, which is the Small Business Administration. There's been some new guidance as far as PPP is concerned for businesses. And so we wanted him to give some updates as far as that's concerned. But before we get to him, I do want to thank our sponsors of all of our community programs. We've got Wright Lindsay Jennings, Frost Accounting Firm, Simmons Bank, and the Little Rock Regional Chamber. They support all of the programs that we do throughout the year. So we're very happy and thankful to have them and their support. Also, for many of you, you may be new to the Venture Center. The Venture Center is a nonprofit entrepreneurial support organization. We've been around for about 7 years, and everything we do addresses everything as it relates to entrepreneurship and workforce development. So we want to encourage everyone that's on the call today to check out our website, learn more about us, and we've got tons of events coming up this year. And I wanted to talk to you about a couple of them coming up in this month of January. So our very next community program is a Lift the Rock, and that's focus is on economic development and things that are going on here in Arkansas. This one's going to be about the value of water and economic development. That's not something you think about a lot of times when you think of economic development, but we're going to have Central Arkansas Water here to talk, as well as some of their peers to share that information. That's this Friday at noon. We've also got insights for hardware product success. So if you are in the hardware product space and want to learn more about the specific industry, feel free to attend this workshop. That's on January 22nd. That's also at noon. Most of our programs take place at noon. We are also launching a new VC Health Mental Health series for entrepreneurs, business leaders, employers, managers, anybody that has an interest in learning more about resources that are as it relates to mental health. We know mental health is a serious issue, especially among entrepreneurs. We want to make sure everybody's staying healthy and sane and making their way through this journey. So we want to start this new mental health series. It'll kick off this month. It'll be the final Friday of every month. We'll have different speakers come through. So we're excited to launch this program. That'll be January 29th. Also at noon. So those are just a couple of the programs we have coming up, but I know you're here to learn more about the SBA and the PPP guidance. So I want to turn it over to Edward, like I said, who's the Arkansas District Director of the SBA, and share those updates. Edward?
Hey, good morning. Thank you, Ashley, for the introduction. Wayne, Mimi, thank you guys both for the invitation as well. Glad to be here and hopefully share some updates with all the folks that are joining in, and want to keep it at least to an overview level this morning to give you guys an idea of what's coming out and kind of give you a status update, and then definitely want to take some questions. I do see some of my team members on board, so I'm hoping they're going to be able to get into the chat and start addressing some of those issues and questions that do come up and arise over this. So we have recently had new legislation approve, the Economic Aid Act and the appropriations of 2021, in essence funded and reauthorized not only small business relief, but SBA operations in its entirety. We fall under the financial services sector of the federal appropriation bill. And so that funds us for the remainder of the fiscal year 21, which started October 1. And really with what's important to you is us rolling out this economic aid that was included in this, which most people know is the Paycheck Protection Program, or the PPP. Now we'll call it the PPP second draw, as well as reinstituting first draw option, as well as some new tools that Congress has authorized SBA in order to help our small businesses. So I'll go through a couple slides and just make sure we can see some points as we're going through this. Right now, what we do have is still economic entry disaster loans. We'll talk a little bit about first draw loans and second draw from Paycheck Protection. Then we'll talk about who's getting those loans, and then also the EIDL advance and how that's being deducted. So I'll give a quick overview on that, and then we'll talk about also what's upcoming in some of these new, like the Shuttered Venues Grant Act, et cetera. So give you guys some time here. You've heard the EIDL. Most of those appropriate businesses have applied. This is the direct SBA loan. So this funding is still available. It's still available up to $150,000. And this is a traditional disaster loan direct from SBA. For those businesses that haven't applied, you have until December 31st to apply for this. This is really to help those businesses have longer term access to capital as they're going through the struggles and changes of COVID. First draw, PPP is reauthorized. January 11th, Monday, we opened up PPP through our CFI entities. Those are community financial institution entities. Y'all may know those as CDFIs or micro lenders and community advantage lenders, also some minority depository institutions. Arkansas isn't well outfitted with too many of those. We've got about 18 CDFIs across the state. And so we're working now with them in order to make sure they're up and processing loans. We've also got the Community Development Corporation, Arkansas Capital, that falls into this bucket. So they've got loan access now in order to start processing these first draw loans, as well as we're working with our current micro lenders in order to make sure they have access to this. One thing we do want to really focus on is this first draw is targeted at getting those businesses who haven't had their first PPP loan, didn't get a chance to apply by the original August 8th deadline. We want to make sure they get access to this. A lot of our hard to serve, hard to reach entrepreneurs, small rural towns, micro enterprises, and independent contractors may not have been able to access a lender for their original PPP loan. So we're opening that up first and foremost in order to give them time and attention to access these funds. Now, when it comes to the changes on the PPP, you're not going to see many changes in the first draw. We have opened up some additional eligible entities on who is eligible for the PPP first draw. Those entities are going to include 501c6s, which normally we think of as chambers of commerce, and newspapers, television studios are now eligible under that expanded eligibility. When we look at these PPP loans, the same process is going to apply for those eligible covered expenses, the payroll. We have expanded those covered expenses under the first draw in order to include additional expenses that businesses were facing and weren't included in the original. So in essence, this legislation kind of broadened who's eligible for it, and then some of those covered expenses that could be included in the PPP first draw. Today is the first day for the PPP second draw loan applications. Again, those are also only processed through the CFIs at this time, the community financial institutions. And so what this does is it narrows the term of eligibility for those businesses that would normally be eligible, but instead of having a 500 employee count, we're looking for those businesses who have 300 or under employees and can demonstrate at least a 25% reduction in gross receipts or a 25% decline in business in the appropriate quarter comparable from 2019 to 2020. So what we're looking for is basically those businesses that were hard hit. That's why the extended title of this is Hard Hit Businesses and Venues Act. This second draw loan will be eligible for up to $2 million and has a 2.5 times payroll, the same as the traditional PPP had. But for those restaurants and tourism industries with a NAICS code of 72, they'll get up to a 3.5 times their monthly payroll expenditures on this one. So that gives a little bit more flexibility for those hard hit businesses and venues that are working with this. Additionally, what the flexibility is done in the Paycheck Protection Program it's allowed the borrower to choose between the 8 and 24 weeks. So they can choose any period between that time frame in order to spend their funds instead of having it either limited 8 or 24 weeks. So that provides our businesses a bit more flexibility when they're looking at how they can use these funds to get back and get access to them. And of course, just reiterating, our initial PPP round that went out, we funded just at $3.3 billion of funding across Arkansas under round 1 in PPP. We had pretty much every one of our small banks and institutions really step up and help get that capital access out to the community. Over 370,000 jobs were saved or supported in PPP round 1. So we're really looking forward to the second round or the second iteration of this being impactful as well. One thing I do want to communicate out there, though, is there's not an immediate rush to the banks in order to grab the money and go before the funding runs out. This program authorization was funded with an additional $245 billion. And we, again, reconstituted the $138 million that was left over from round 1 in order to bring up the total funding under PPP and business resources at $806 billion. So what that is really a long way of saying is we've got some time, and what we're trying to do is roll this out methodically to make sure that the borrowers have the full understanding of the program as well as the lenders in this round. So we're really focused on getting to those underreached and underserved communities. Another great factor that the Economic Aid Act brought was the decoupling of the EIDL advance. So normally we had the EIDL advance grant opened up where businesses could apply directly to SBA and get an advance grant of $1,000 per employee up to 10 employees, which would give you the total of $10,000. With this legislation, what we've been able to do is decouple that from the Paycheck Protection Program. So what was happening is if you did receive an EIDL advance and a Paycheck Protection loan, your forgiveness amount was being reduced by that EIDL advance. Congress was able to go ahead and approve that decoupling because what normally happens is we cannot duplicate federal benefits. And so what the legislation created in this essence was a duplication of grant-funded benefits. This is in essence got rid of that through this legislation, and now any of those borrowers who have had forgiveness and submitted the forgiveness applications that were processed and also had an EIDL loan and that forgiveness was reduced by that, SBA will be working to reconcile those with your bank. We'll work directly with your lender in order to make those payments back to the lender. And if you've already made payments on that, that lender will then reconcile with the borrower as these things move forward. So that really gives us kind of where we're at right now. Paycheck Protection, first draw is in works with our CFIs. The second draw opened up today, and that's focused on those smaller hard-hit venues. And again, this is a process and in work right now as we move forward. What we do have on the horizon and under the Economic Aid Act opened up a couple more venues. So we will see some loan increases we'll talk about for our some borrowers, as well as the grants for shuttered venues, extension of the debt relief program, and some EIDL advance that are targeted to specific communities, as well as most of you all know our traditional SBA 7A 504. So there is some language in the Act that gives us a chance to really relook at those seasonal businesses and how they computed their initial loan application and how farmers also did it and ranchers as their applications. So with that, we're kind of looking back and applying these changes across the entire PPP application process for both first draw and new borrowers. So those PPP changes, as we roll these out, they will we will communicate directly with our borrowers on exactly who needs to look at going back to their bank and discussing, hey, my calculation wasn't in line with the new changes, so let's go ahead and increase that loan authorization before I look at a second draw loan. So what we want to do is we want to make sure we're doing that methodically, and we want to make sure we really tackle the right borrowers who are qualified for this. So this isn't going to be if you got a PPP loan immediately, you need to really go to your bank and find out if you're qualified for an increase. We'll release that information when we do have it. We're waiting for additional procedural guidance is what we call in order to target those borrowers who may be eligible for an increase. The grants for shuttered venue operators is a new program that was created under this legislation. What this is really looking at any eligible business, specifically these eligible entities listed here, the live venues, theaters, performing arts organizations, the mass gathering places that have really suffered due to COVID. This gives them an option to be able to look at either Paycheck Protection or the grants for shuttered venues to see which one might be more beneficial for their entity. So we are looking for at least a 25% reduction in order to qualify for this, but this legislation has put two separate application windows in place. The first 14-day application window is going to be for those venues and organizations that suffered a 90% decrease in revenue. They're at the front of the line for the first 14 days. Once those 14 days elapse, then we'll look at the second group of entities that suffered a 70% reduction in overall revenue, and they will be eligible for the second pool of applicants in this grants for shuttered venue operators. So we'll talk a little bit more and see a lot more detail coming out of this. What we're uncertain about this grant program is where it will be housed in the overall SBA, if it's going to be housed under the Office of Disaster Assistance, or if it may be housed similar to the Paycheck Protection with a delegated lender status authority. So we do have an upcoming webinar on that tomorrow. And I want to make sure we get folks signed up for our updates coming out of our office, because we do send out updates on a daily basis at this point. If not weekly, on the new programs and new opportunities we have for training and program updates as they do come out. But we'll make sure we get that one circulated as well. And I think my team might even be able to link that into the chat. So if you're interested in this one, our Office of Disaster Assistance will be presenting on this one tomorrow as well. Additionally, in the Economic Aid Act, we have, and what has been reauthorized is the debt relief program. So that debt relief program originally under CARES, Section 1112, gave existing borrowers that were 7A, 504, and microloan and community advantage loan borrowers. A lot of acronyms, I know that's the way we roll in SBA. If you had an existing SBA loan that was one of those loan programs, what SBA did was we stepped up and worked with your lender to cover 6 months of principal and interest payments on any one of your loans, and any loan that was made up until the December 31st cutoff date. Well, what SBA and what the legislation has done is reinstitute that program, but we've been a little bit more targeted in the rollout of that and focus. So all borrowers with those qualifying loans will receive 3 months of principal and interest payments on this round, starting in February. And then after that 3 months, SBA is going to go ahead and look at the available funding and see how we can best utilize that to focus on the hard-hit businesses that really need the additional assistance. So if you had an SBA loan, or if you do have an SBA loan, this is another benefit that's coming down the pipe in order to help create some more liquidity in your business and help you get through, hopefully, till we can get to point of vaccinations completed and a level of reconstitution. The EIDL advances that were up to $10,000 advance at $1,000 employees are going to be reinstituted at some point in the near future. This is going to be a little bit different because we're going to target those advances into those specific low-income areas who really need this access the most. One thing, working with our microfinance entities, working through community banks and fintechs across the country, we've been able to get out an unprecedented amount of capital into the community. But it always helps when SBA can deliver that capital directly and make sure we put a direct line from us to the borrower to make sure that borrower can get access. So this EIDL Advance program is going to help us reach some of those most challenging borrowers that may not have access to financial institutions, access to some funding relief to help get through this as well. So emergency EIDL advances, we've extended that period as well up to the 31st of 2021 to allow more flexibility and make sure we can help as many borrowers as possible through this program. What SBA has done also is, I know we've got some challenges out there, but originally that program was rolled out as a 3-day advance where you'll have money in your account within 3 days. SBA has also instituted some additional fraud, anti-fraud mechanisms and identity verification options in order to verify a lot of these applicants that are coming through the system are valid applicants. They're not fraudulent entries. And so we've extended that 3-day deadline to 21 days to make sure we can do some due diligence on the front end and make sure that the program isn't oversought with fraud to the point where it becomes ineffective. So that's part of the congressional mandates that were also integrated in the Economic Aid Act to help not only deal with the level of borrowers that we have, but make sure we're getting the money to the appropriate entities to those who need it. So those have been instituted as well. As you'll see, our traditional loan programs have fared well. We're going to increase our loan guarantees on the 7A loans. Traditionally, you would see a 75 or 85% guarantee on those 7A loans. We're tacking those up to 90%. Normally where our export working capital loans would be. Our 504 loans, which is our fixed asset financing, so buildings, heavy equipment, et cetera. That type of financing program, we're creating some reciprocity between that so we can help borrowers who have maybe higher interest debt or challenging debt that they're unable to service to look at refinancing options to get that under a lower, better term that's more comfortable for the borrower to help them extend their cash flow to survive the pandemic and the crisis. As well, we've stepped up funding our microlending institutions across the country in order to help not only the smallest borrowers access capital, but go through the technical assistance and training that they're going to need to manage that capital when they do get it and better fare the pandemic as well. For those 8A businesses that are certified through SBA, the 8A business certification is a certification for economically challenged and socially challenged businesses or disadvantaged businesses. This will allow them to extend their program for up to a year. Normally it's a 9-year program, but we understand that the federal acquisition has been slow and the challenges that COVID has presented may have impacted their business development schedule. So we're seeking and giving them an option to extend that certification for up to a year through this program, which will give them another year to compete for federal government contracts on a much narrower playing field and be more competitive when we do get to a more traditional normal operating tempo. So a couple things that I want to point out: make sure you stay in touch with us. Make sure that you're following us on social media at SBA_Arkansas. Make sure you're signed up for our updates. We're sending those out on a frequent basis. As soon as we get new information, that's usually the first place we go into our Gov delivery system to do a statewide blast on these. We also release information about all our upcoming webinars that my gracious team is hosting and diving into starting this Friday, where we'll be tackling PPP forgiveness and really looking at those changes to the forgiveness application. And then we'll, of course, be rolling out with new forward-looking applications to how to prepare for the PPP first draw application if you're a brand new borrower, where to start and help you navigate that process. We know there's a lot of resources out there and they're coming fast and furious, so we want to make sure we're there as a guide to help you all navigate all these different programs and how they may be applicable for your business. So you can contact us directly at the Arkansas District Office. We've got a team of 5 over there right now. We're a pretty small team that's been handling this from the beginning of the pandemic. So we want to make sure you have access to us. and also let us know how we're doing. We can always use your feedback on what's working and what may not be working for all of you. But we don't come to this alone. We fund a lot of what we call SBA resource partners in order to help navigate this process as well. If you go out to sba.gov/local assistance, you can type in your zip code, and anywhere across the country or the state of Arkansas, you can find those SBA funded resource partners who you can schedule a visit with, sit down one-on-one and go through your specific business issue that you have and get some feedback and make sure you get some consulting from them on the best way to move forward. This is how we take a 5-person team at the SBA Arkansas District Office and multiply it to help our over 240,000 entrepreneurs across the state and those small businesses that are essential to the backbone and the economic growth of Arkansas. So I'll leave the contact information up for all our partners around the state that have funded grants with us. So you can reach out to them either directly or through the SBA Find Local Assistance tool. And I'll turn it back over to Ashley. If you want to start up Q&A, I'd be more than happy to address any questions that we do have.
Absolutely. Thanks for that, Edward. And we did want to go ahead and open it back up for questions. There was a lot of information covered, and I wanted to reiterate, this is being recorded, and we know things change and that's going to happen, but what's being recorded and what has been talked about today will live on our Facebook page, so you can follow us at the Venture Center. And also for those that have registered for this event today, you will also receive a follow-up email with this presentation, because I know some people joined at different times. So just wanted to reiterate that and, like I said, open it up for questions. Kudos to your team, Edward. I've been seeing Claudia answering the questions in the chat. She's done a fantastic job.
And Joshua as well.
Joshua posting where you can find additional information and updates. Any other additional questions? I had a question come through my email. This person owns a rental apartment building and they have no payroll, just member draws. And they were wondering if they're allowed to apply for the new PPP loan. And if so, what would qualify as payroll expenses?
Yeah, so, you know, the passive real estate investing is not really considered an eligible entity under SBA's guise for paycheck protection. You know, this, I've got to go back to the intent of the legislation, and the intent of this entire relief program was to help those employer businesses who have either independent contractors, self-employed, or employees working in their business, to make sure they had funding to pay those employees and keep them employed. For those passive investors that have, let's say, apartments or rental buildings, their relief can come through the EIDL loan. They are eligible to apply for SBA's EIDL loan in order to get any assistance that they may need. As well as, I know in this legislation, after my conversations with Congressman Hill, there was some additional renter relief involved in that package. So assuming most of your form of relief would come through your rental assistance programs, because ultimately that's your salary draw at the end of the year anyway.
Great, thanks for that. Any other questions? I'm sure there are additional questions. Go ahead and post it in the chat if Claudia hasn't already answered in the chat. Someone has a question about independent contractors. Edward, you want to take that one?
I'm sorry, can you read that one out to me?
Yeah, independent contractors that you have as employees, will you be able to count them as employees if you don't have them as W-2 employees?
No, so again, we're going back to the original, the original eligibility and the original qualifications. Independent contractors should be applying themselves for their own PPP loan. You're not carrying them as an employee since they are an independent contractor. So you'll need to look at your own business, and if you have the 1099 contractors, they need to apply for their own PPP loan, and you need to look at who you have directly employed and the owner's compensation for your business. So that eligibility is going to go through. Same with self-employed individuals. If you're a 1040 and you have net income from your business, that's what we're going to look at. I've gotten a lot of questions on documentation and what does SBA need for documentation. I like to say we're pretty open about, how do you verify and validate your employee payroll or your expenses, or now even the reduction that you're going to have to prove for the 25% reduction. So I tell people SBA is used to dealing with multi-million-dollar companies. We helped FedEx get its start. We helped Ben and Jerry's get their start. So we know big business as well as small business. And so whether you're that entrepreneur who's got a multi-million-dollar venture and have all the proper accounting procedures in place, or if you're like a lot of folks I know who are doing shoebox accounting, really what we want to be able to see is we want to be able to see canceled checks or written checks that have been cashed to be able to prove the transactions were for the eligible expenses. We're looking at bank statements. We're looking at really what the entrepreneur or small business uses to normally validate their tax roll anyway. And a lot of this is, if you're not really sure, you can always talk to your CPA or your lender directly to find out what they're using for their other borrowers in qualifying and quantifying some of these expenses and costs. I got a question here. I'm just seeing out of the corner of my eye. I'll tackle too. Is there some guidelines for calculating FTE, second draw? The guidelines are going to be the same. In essence, what we have not done is change the foundation of what Paycheck Protection is. On the new one, what we're looking for is the same information we were looking for on the original, but eligibility is now 300 employees, and you have 2.5 times payroll, just like you did. But now also those NAICS code 72s, the restaurants and hospitalities, they'll get 3.5 times payroll. So we're going to do same calculations on employees as well.
Okay, it looks like another question's come in, several on the EIDL loan. So this person says they received the EIDL loan without requesting the $10,000 grant. Should they go back and request the grant?
Yeah, so, on the EIDL loan, most of those applicants that have gotten in, and I think the timeline was expected when they rolled this thing out, to get EIDL loans out the door in about 4 weeks. 4 weeks came and went, 8 weeks came and went, and I think a lot of the challenges that those folks that have had their EIDL loans now, we're 6 months down the road, they're going to have to request those increases. You'll need to go ahead and work directly within the loan system and your loan program manager at that with the Office of Disaster Assistance in order to request that loan increase. You should have been assigned a case manager, is what they're called, when you received and signed for your loan documents. You'll need to reach out through that system for any increases or reconsiderations that you have going forward. I can tell you, I'm managing expectations with this one. It's going to be a lengthy process. SBA, Office of Disaster Assistance, is still working through their applications and reconsiderations from the initial, and those really haven't slowed down too much since we've even instituted the new processing procedures. So I know it can be frustrating. Hang on, and if you are to the point where you've got a couple of weeks and you haven't had any communication and you've got something pending, please get a hold of my office and include your SBA loan number, your information, the borrower's actual information on that loan, and make sure you get that to our general website number or up to one of my team, and we can try to help figure out where that loan is in the process. But unfortunately, at the state level, they've kind of firewalled us with what's happening on the EIDL loan side, so we can't really see inside that.
Okay, that's great news. And then this person has a question about acceptable documentation. What is acceptable documentation to evidence the 25% reduction in revenue?
Yeah, I think that goes back to, depending upon what documents you're using on a normal basis, it's a calculation of gross receipts that the IRS states. Those would be a profit and loss, pro forma statement, anything that you have. Could be the items you use to fill out your tax forms, any interim financial statements that would be signed and attested to by the CEO or the owner of the company would be all reasonable documentation. I would definitely get a hold of your, if you have, lucky to have a CFO, your chief financial officer or your chief shoebox keeper, and figure out what documentation you can put together to make sure you show that. And I think that's been a challenge that we've seen across this, is that the formalization of your accounting practices and bookkeeping practices has really come to light during COVID, to find out exactly how many businesses don't necessarily do that on a pretty consistent basis. So you may need to engage some outside help in order to do that. And that's where I would definitely direct you to our resource partners as a good start. But using your internal financial documents that you currently do have should suffice. Again, this program, the PPP second draw, is going to go through your lender. So make sure you also communicate to your lender that this is what you're planning on doing, and make sure they're in line with that as well.
That's great information. As you've mentioned, and it's shown up in the chat, you guys will have several other presentations on this topic as new updates roll in, and you've got additional information to reach other people. But also wanted to reiterate that we've invited Edward Haddock back on February 5th. So if you missed some of these, or you just need clarification in about 3 weeks, February 5th, we're going to host another one of these, and we're actually going to have some bankers as part of the panel, some CPAs that can answer some of those financial questions, and also, let's see who else, Arkansas Capital Corporation will be with us as well. So any topics regarding those, be sure to attend that February 5th. I believe it's at noon. We'll put out a whole promotion around that too, so you can register just like you did for today's program. I'll give a few more moments for questions. Like I said,
yeah,
a lot
actually,
of those,
let me.
go ahead.
I've got one from Kathy here. What about small farmers in rural communities? So if you're a small farmer, rancher, and qualified under the AGRA side, definitely your farm credit, your Farm Service Administration, farm credit can authorize these loans. You can go to your local lender, or your local farm lender, or traditional small business community lender there. And you can also go out online. I think there's a lot of banks and non-bank lenders enabled with fintech applications. So you've got the option to apply. What I would suggest, if you are looking for a lender, go out to sba.gov/lendermatch. And you can put your information in there, and it will send that out to a list of those qualified lenders. And right now, since we are trying to get really into our underserved community, is we're directing those into our CFIs as we begin and kick off this program and process. So make sure that you go, and we will again be having and producing some lists once we get confirmation from our banks that are working and receiving applications, to get that out publicly as much as possible and promote that.
Information. And we also have a few more questions rolling in. Is there any discussion about forgiveness for the EIDL loans?
No, EIDL loans are not forgivable loans, so they are the traditional long-term financing product of SBA. There hasn't been any. If you know a local congressman, you can always talk to them about making changes, but right now that's not on the agenda. I've got a question here as well that we're a business with a 72 NAICS code, have multiple locations filing under one ID. We have more than 300 employees combined, but not per location. And that is correct. You still will qualify, because what SBA has done in the authorization has looked at that per location size. We're still going to aggregate you on an affiliate to make sure you're not exceeding the affiliates. That's when you have multiple businesses that are all interrelated. But per location, you should be fine, Randy, on that one.
This other person wanted
Benny,
clarification on the PPP loan. There's no banks currently doing the PPP loan yet. Is that correct?
So right now, yeah, it's pretty much non-bank lenders, and we do have some CDFIs that are authorized. So our CDFIs across the state, I think we can get a link out to the CDFI webpage where all those CDFIs are listed and certified. It's going to be up to them if they're processing. We've kind of had a hard time because CDFIs are development financial institutions. They're generally smaller and work in smaller community loan pools. So we've been working with them to try to support them, but it's going to be up to them to process and open those applications up. So I'll make sure my team gets a link into the chat as well on those community financial institutions.
Fantastic. I believe all of the questions have been answered, either by you or by your awesome team in the chat. Okay, here's one. Is this loan reported to the big 3 credit bureaus like a traditional loan?
Yeah, this loan has not come with reporting instructions as of just yet. So we are waiting to see, and long term, once these loans are reconciled, what reporting requirements they will have. But really the intent is to get these on the books and off the books within the covered period. And I think SBA has done really a reasonable job getting through the forgiveness applications. We've worked across the state, and we've seen a lot of our forgiveness applications get processed within the 90-day period SBA set. We do have a couple that are lagging beyond that, but generally if you have a loan that's under $2 million, it's getting processed pretty quickly, and then it's on and off the book. So it's not really a repayable loan in that sense that's going to be reported to the credit union or the credit facilities. I've got a direct on he's asking about the comparison. And SBA has published the comparison for the second draw loans on the instructions of the application. And what SBA is looking for is the quarters as calendar years. So you'll need to work and look at those quarters for comparison based on the calendar year. And that may impact eligibility and qualification. But we're looking for a 25% decrease compared first quarter to first quarter.
Great. There was one other question about, do we have a date on when banks will start rolling out this PPP process with their clients?
Yeah, right now we don't. It's not open to banks. So we are expecting, and what SBA has stated in the near future, that will come open and available to our lending partners across the state. You know, part of this legislation really carved up the authorization, the $245.5 billion that was going into this round, into different tranches for asset size lenders. And so I think SBA's got the intent to really look at the smallest banks and the smallest lenders first and make sure they have access to the program. SBA's communicated numerous times to our office and throughout that they're taking a methodical approach to this and really trying to slow the process down enough so there isn't a panic and a run on money like we have seen in the future. So that's one thing that I want to make sure I communicate to you all is we do have time to get your borrowers in front of folks, but I don't want you to wait until it's too late. If you do have small borrowers you're working with, small either independent contractors or small businesses, please make sure you reach out to me or my team to do one of these events with them. If we can do that, we'd be more than happy to help reach out to your communities and make sure these folks have access to the tools that have been provided.
Okay, this person wanted clarification on something. They read that gross receipts would be defined as all revenue plus cost of goods sold. Is that correct?
all revenue inclusive of cost of goods sold. Yeah, you're not going to, and I think that was a misconstrued. You're not going to add double back in your cost of goods on top of your revenue. So that's inclusive of cost of goods. And if you look at the IRS definition, that's what you'll see. Gross receipts are defined as revenue inclusive of cost of goods.
Great, thanks for that clarification. Double checking. Any other questions before we wrap up?
I guess, do we have any voiceover questions? Can we open up the lines, or is that possible or needed?
Yeah, if maybe it's too much to type out, if you want to unmute yourself, you're more than welcome to ask a question. Don't be shy.
Well,
Edward, hi, this is Mildred. Would you recommend when it opens to the lenders that we work with our lender, the one that we did the first PPP loan with, in this second round?
are you asking if would I recommend?
Yeah, should we work with the same lender that we worked with in the first round for the second round?
Yeah, that's a great question. So there are provisions where if you do have a first PPP on file and they have your documentation, you're not going to have to duplicate that. So there are some benefits to doing that, but I mean, that's really, that's your choice as a citizen of a free enterprise system. Is if they were good to you and it had everything great, yeah, you can go back to them, and as long as they're willing to process loans for you, because the bank has some autonomy and some choice in this. So if you went to that lender and they're processing second round and they're open for it, great. If you feel like you didn't have a great experience, you're always more than welcome to go to any lender of your choice.
Thank you.
Are there any available? I'm sorry. Are there any available options for a new business? Because I've been turned down for EIDL, for PPP, for micro lending, for every resource out there, for a brand new business that just opened up last January before COVID hit.
Right. Thanks, Ms. Kate. Obviously, yeah, we're looking at those traditional SBA options, the 7A, the 504, the microloan are traditional loan products. Now, obviously, those have an impact and an assessment of credit and the 5 C's that we would consider in traditional debt lending. So character, capacity, collateral, and conditions. Now the lender still have to assess all those in order to make the loan. We cannot force the lender to make a loan using our guarantee if they're not comfortable with the deal in itself. So there are no direct access to SBA for startup loans. You would have to work with one of our lenders, whether they be a delegated lender, a microfinance institution, a CDFI, in order to qualify for that. But I think we're at the sorry, Vincent. Let me just finish up. I think we're at the venture center. It depends on the type of business. I'm sure our folks around here have a lot of access to other traditional types of capital that might be eligible for those startup entities, depending upon what you have as well.
Me? Hey, yes, sir. I didn't include myself on the first PPP as salary, as a loan, I guess it's called recovery pay income. I didn't include myself. Do I include myself this time as well? But what about the first time? On the first PPP loan, I didn't include me or my painter or a couple more things. I done just the basics to get by.
Okay, yeah. So what you'll need to do is, if you fall within some of those eligible entities, a seasonal business or a farm enterprise that we're going to release here in the near future on how to go and increase your loan, then you would be eligible for that increase. If not, if you're not one of those businesses, most likely you're not going to be able to do anything to that first loan. You're not going to be able to increase the size of it. But as long as you meet the criteria for the second draw, then you would be eligible for the second draw.
What I was saying, I didn't pay myself. I'm in resales. I'm in an antique business, and I didn't pay myself. I just paid my guys. So I can't recoup me from then. Sorry. I can't recoup myself from then.
Right. Once you've gone and once the bank has processed that loan, there's no way for them to change it. SBA hasn't authorized that because they're trying to get the funding out in a single time. So unfortunately, if we gave them the open window to make changes, I think that would be overwhelming for a lot of our lenders.
And we pay our utilities if needed out of it at a 60-40 rate. Is that correct?
That's correct. It's still 60% payroll and 40% other covered expenses.
So the covered expenses is not.
I'm sorry, the covered expenses.
The covered expenses that you said that we're able to pay out of it, legally pay out of it. That is not recovered. That's just part of the 60-40. The only loan is just the loan for the lost wages, right? It's for the payroll.
Yeah.
PPP is just payroll completely. Gotcha.
Yeah.
That's all I needed.
If you got a $100,000 loan, you can only spend $100,000. 60% of it needs to be payroll before it's reduced on any forgiveness.
I got you. That's all I needed. I thank you very much.
All right.
Absolutely,
Thanks,
sir.
Vincent.
Thank
We've
you.
also got a question from Heaven. Heaven, you want to go ahead and ask your question?
Yes. In 2019, when I did my PPP, it was based off your 2019 tax returns. But when 2020, after Corona hit, when we opened back up, I had to add probably about 3 employees on that I didn't have in 2019 that I've been paying for. Can I still get the second PPP? How would I show that? Because that's the revenue out of my pocket now. So it's, it shows like I'm making less now because I got payroll now.
Well, we're not necessarily interested in your net profit. What we're interested in by calculating is your gross receipts. And if you've had a decline in business since that comparison period. So if your revenue has suffered, if your top line revenue has suffered, then you're eligible. If it hasn't, congratulations, you've been able to grow during the pandemic. That's how SBA looks at it.
Okay, cool. Okay.
Thank you.
And I believe this one was already covered, but I wanted you to go ahead and reiterate it. This person had no one on payroll, but had individual contractors on 1099. Are they eligible?
Those individual contractors are eligible themselves to apply. You're not applying on their behalf and using their salary as your payroll protection loan. So those 1099 contractors would apply. Where it states in the application is that also authorizes you to be an eligible entity for an application, right? That means you as a business owner who used independent contractors can now apply for your own business as well. So I know when we saw that caused some confusion with business owners on am I eligible or not. So yes, you're eligible to apply, but you're not including the 1099 contractor's wages in with yours. And I'm going to go back to the chat. I see we've got a couple in here. Rich asked a good one. Has the PPP forgiveness process changed in any way? And should we keep our request in or pull it back until later? Rich, that's definitely a good question. So the forgiveness process is changed is they've expanded the eligible covered expenses. Those eligible covered expenses now include a couple other things that weren't included in the original, like any kind of cloud computing software or HR and accounting needs, covered property damage costs, supplier costs, and any worker protection expenses that you had to implement to keep your folks safe. It really depends. If you've used the funding and it's been used for eligible expenses, you might as well start processing your forgiveness application. However, if you haven't, and those expenses haven't been used for eligible covered expenses, payroll, or covered costs, then you're going to be ineligible for a second draw loan. So make sure you're using your first one in accordance with the guidelines and using that on covered expenses and payroll in order to qualify for the PPP round 2. Derek asked, this sounds almost too good to be true. You fill out your paperwork. When do you have to fill out the paperwork again for forgiveness? Do you have to make any repayments prior to this? No, Derek, 100%. The gods have shined upon us. It's this moment of our need, right? That's really what this is. You fill out the application. It's not the easiest application. It is a government application. You take it to the lender. They approve it. If they approve it, they fund your money. You get between 8 and 24 weeks to spend it. It needs to be spent on at least 60% on payroll and the other 40% on covered expenses that are eligible. Rent, utilities, accounting, any kind of payroll costs, anything that you have associated that is essential operations covered under this. You fill out your application, you take it back to the lender once the money's spent, and you say, this is what I did with the money you gave me. This is exactly what I spent it on. They submit it to SBA once they approve it, and then SBA says, okay, if it's forgiven, we're going to cut a check back to the bank, and you owe nothing.
Thank you.
Yeah, absolutely. The entire intent is to support payroll out of our pocket for this time being and keep your business open so you're not going to the unemployment line.
Okay. Well, I was asking for my wife. She's a licensed daycare provider, and she didn't do anything during the first round. And my son, he works at the local bank, and they're gearing up for all this stuff. So we're trying to figure it all out and see if it's worthwhile or anything. And so, all right, but thank you.
Yeah, if you need access to capital because your business is struggling, it's definitely worthwhile, right? The intent and the certification statements that are in the applications, though, make you certify that you have a need for this loan, that your business is suffering. Where if we see a business that's seen hockey stick growth or seen revenue improvement has fared really well, you're really not the intended recipient of these loans, right? You've been a fantastic entrepreneur, and you figured out how to monetize uncertainty and disruption. But for those who necessarily haven't been as successful as that, we want to make sure you have access to resources for that.
So do we go on your website to get the paperwork, to fill it out, to give it to the bank first?
So you can go to sba.gov/PPP in order to download the applications form. But my suggestion would be go directly to the lender that you're working with and start talking to them, because they may have an electronic process that's going to simplify it for them and put everything into their system right away without having to duplicate too many items.
All right, sounds good. Well, thank you. Glad you're doing this.
You're welcome.
Great question. We've got one final question. We'll use this one to wrap it up. This person just wanted some clarification on the first PPP draw. There was some that wasn't fully forgiven, and there's a balance owed by the borrower. Can that borrower still be eligible for the round 2 PPP?
Under the way we have the guidance written right now, no. So the PPP round 1 must have been used for eligible covered expenses and payroll in accordance with the policy before they can be eligible for round 2. So we're trying to seek some additional guidance on that, but there is a certification statement on the backside. Will that change? We don't know. Make sure you sign up for our updates and keep updated. As this thing changes, we're going to keep everyone informed. And again, Ashley, I want to thank you and Mimi and Wayne over at the Venture Center for being such great hosts today and making sure that all the folks here in Arkansas can get access to every drop of resources that we can to help us get through this.
Absolutely. And the Venture Center is always happy to help and give you a platform to talk about this. So thank you so much, Edward, for answering all the questions and giving some oversight to these updates. Also, your team, like I said, was amazing, answering all the questions in the chat. Joshua, Claudia, thank you guys as well. As he mentioned, please go to the SBA site, talk to your lenders, get prepared for this next round. They've got additional presentations coming out to talk about the updates we do as well. As a reminder, February 5th, if you want to attend then, we'll have Edward back. We'll have some CPAs as well as some bankers and Arkansas Capital Corp. So be sure to attend then. That way you can ask your questions there as well. We want to thank the audience for their questions today. And again, our sponsors, Wright Lindsay Jennings, Frost Accounting Firm, Simmons Bank, and the Little Rock Regional Chamber. Feel free to check out our other programs, register for what interests you. We hope to see you again soon. Thanks, everybody.
Thank you, Edward. Always great.
Thanks, Edward.
Thank you all.